Hello, and on this edition of the Business Spotlight podcast, I'm joined today by Damian Burke. Damian is the CEO, the founder of Custom Credit, and they're a fintech company. Damian, it's great to have you on the call. Thanks for joining us.
Cheers, Gavin.
Damian, tell us, let's start with what you do, what your business is all about, why you do it.
Okay, so yeah, as you mentioned, I founded the company back in March 21, and really it was a response to 20 odd years in the industry at that point, kind of having seen it all, done it all, and probably being slightly disappointed with the way the industry had turned out over that period of time, and maybe the progress that had been made. And particularly with customer understanding and customer centricity. So I decided it was time for a change, and I created this personal loans company, which effectively is very tailored to the individual. So the first way we tailor things is we make decisions based on the individual customer's data, generally through open banking information. Now that's different in the industry. Most lenders use averages, either for income through credit reference agencies or expenditure through ONS. We use open bank data, so it's actually based on the individual's income and expenditure over a period of 12 months. So we can see things like seasonality and variability and all of that sort of stuff. But we also then tailor the loan structure as well. So rather than just understanding what that variability might look like over time, we adapt the loan structure to allow for it. So, typical scenario is somebody who gets overtime quite a lot, say, a builder with sort of 10 months of the year gets their overtime. If they're kind of in a marginal on the affordability assessment, typically they would get given a loan which for 2 months of the year they cannot afford. And there's nothing the lender can do at that point because they've asked them to pay, say, £120 a month. Our structure actually allows for that by allowing a smaller amount when they don't get their overtime, which we call the flex low, and then a larger amount when they get the overtime that they've racked up, and they can pay up to the flex max to effectively get them back on track with their kind of normal schedule, as it were.
So what I'm hearing you say, it's quite a lot in there, but there's obviously a high degree of personalization. The starting point was you looked at the industry you were in and thought, well, this isn't really serving the customers.
Yeah.
I guess from an external perspective looking in, I can see that this is about how you can do things differently as a business and set yourself apart, differentiate yourself from your competition, but also from the customer's experience. So moving into something that is quite different from what the rest of the industry is doing, how did you find that journey? Was that a fairly straightforward thing for you, or did it involve barriers perhaps that you've had to face that others wouldn't? Tell us a little bit about how you got started.
Yeah, so I think the first thing to say is the FCA, part of the Bank of England, have never approved this type of structure before. So inevitably that comes with some barriers. So things like, well, what if the customer always to pay the flex low amount? Clearly that's a risk to the customer, because they would turn say a 36-month loan to potentially a 46-month loan if they always paid the flex low payment, and it would cost them more in interest, right? So we had to show them, for example, how we were going to communicate with the customer and effectively our treatment strategy. So our treatment strategy is to allow the customer to use their flex low, but communicate to them what it means. So essentially, if the customer looks like they have lower affordability in a given month, we would say, well, we're going to take, say, £80, your flex low payment, instead of the 120. And if you're happy with that, you don't need to do anything else, but you do need to understand that it will cost you maybe an extra £1 or £2 in interest, because it's all based on the daily balances, and clearly those daily balances would be higher. Assuming you catch up next month. And then the communication around next month would be, what we're trying to do is get you back. So if there was extra affordability in that month, we may say, we want to take, instead of 120, 130, right? wouldn't get them back to on schedule, but it would save them some more in interest. We would communicate that as well. And at any time, the customer can pay more if they want. Critically, what we have to do as a company is tie the benefit of and the risks around that kind of interaction back to what we do as a business, right? So we were able to satisfy the FCA around the communication package and the treatment package in a way I don't think another lender can do convincingly, if I'm honest, because I've worked for a lot of them over the time. But also, you know, from our perspective, as a relatively new company, we've got to consider things like the funding costs for our debt, because like most consumer lending companies, we will borrow from a wholesale bank and then we will lend to the consumer, right? So we have to show the bank that we're a good risk, right? And if all of our customers were paying behind their original schedule, one, they may perceive that as not very good risk, or certainly not the risk that they thought it was. And also they may say, well, actually, you still have to pay off over this period of time, but all of your customers are paying off over this period of time. So if we were in that position, then effectively we wouldn't have enough money to pay back all of the loans in the time that we need to do it, right? So it's very much about tying our objectives to the customer treatment and making sure that it's in line with what a customer would want and what a customer would use. So I think we've been able to do that successfully, and definitely the FCA have shown that by approving us. I think the other thing, just in terms of challenges, is the technology, right? So something you may have heard of, open banking allows us access to customers' data with their consent and their transactional history with banks. So that's been around for a while, but the way people have been using it is fairly constrained. So typically people would use only very high level data, so aggregated data. So, you know, what's the net position on a particular spending category? And then also, if they did use it, they'd use it very sparingly, maybe the last month or potentially the last 3 months, right? So there's challenges in how we are using it, which is at least 12 months history and at transactional level, that other lenders wouldn't necessarily have, or certainly they wouldn't have to do things that we've had to do. I think there's another case around that for adoption. So it's becoming more prevalent. So I think one of the FCA surveys suggested around 50% of adults would now be happy to provide open banking data where there's a benefit to them, and that's growing all the time. But probably we couldn't have done this, say, 3, 4, 5 years ago. And then there's other elements of it as well with the payment side of things. So traditional payment methods again are relatively inflexible. So things like direct debit, they've been great, and there's guarantee behind it, and everyone understands it, but they are quite inflexible. Typically, you can't change it on the day of the payment, for example. You need a few days, working days lead time on that. So we've actually introduced with another company that's developed this a payment method called variable recurring payments, and it's all on the same smart open banking rails. But it effectively means that we can agree with the customer up front. We would take, say, up to their flex max any given month, and then that allows us to take any amount. So we could take, if we wanted to, say £20, even though the loan amount is 120. Now, that's not necessarily or overtly a great thing for the customer. But what it does mean is, in that scenario, they'd only be paying interest on the £100 short, rather than, say, with a big high street bank, they would be paying interest on the full 120. Typically, that bank, not every bank, but lots of banks, would also charge a fee, an arrears fee, which we don't charge. And typically with a direct debit, that borrower may be charged from their bank a return direct debit fee, which you don't get with variable recurring payments. So we've had to work out how to best to deliver that, and also best deliver the message to the customer so they understand that it's actually a good thing for them. It's also a good thing for us because we've got more certainty over the payment and more understanding of it, and we also it's typically it typically costs us less money to process as well. So it's one of those very rare win-win situations.
Absolutely. So the two things that are coming out of that is how you differentiated yourself from the competition also, and how personal it is for your customers. So tell me, what's your vision for the business? Share with me what it is that's driving the business forwards.
Yeah. Okay. So when we set about creating custom credit, one of the first things I thought about was, well, what are we trying to do? Because it's pointless just saying we want to create a loans company. So we came up with 3 mission statements. So we always refer to them as we're on a mission 2, right? So the first one is to become the most customer-centric fintech in the UK.
Okay.
The second is to ensure that our colleagues reflect our customers.
Right.
And the third is to improve financial literacy. And they're all kind of interlinked and entwined, but they're what we live and breathe every day.
Yeah. So as a coach, I find that interesting. The fact that, first of all, that you are driving, those 3 mission statements are driving your business. They're very focused on people. You've already noted separately that they're not necessarily measurable, but what is really powerful about them is that they have longevity. They're going to be relevant in 10, 20, 30, well, any period of time going forwards. Was that an important consideration for you?
Yeah, absolutely. So I've often felt that, well, first of all, I often don't understand the difference between vision and mission. And I think a lot of business coaches focus a lot of time on that. But I've worked in organizations where they introduce culture or values or missions or visions or whatever they want to call them.
Yeah.
And first of all, they get very focused on, well, how do we measure it, right? Because effectively they've got to appease something, whether it's HR or whatever. I don't know, but they want to measure it. And typically what happens is they either say, yeah, we've done it, and that's it, it's over, that we don't need to worry about it anymore. Yeah. Or they say, we haven't done it, but let's forget about that one and let's move on to something else, right? So it's kind of a rebranding of what those things are. So for me, it was really, really important that when we're making decisions, it's not so much about can I tick a box and get to the next step, or can I say that I've done it? It's more about, am I moving in the right direction? So, for example, being the most customer-centric fintech in the UK, I could come up with a way of measuring it. I deal with data a lot, and data is always subjective, depends on how you present it and all that sort of stuff. But that's not really the point. The point is, when we're making decisions, I have to ask myself the question and ask the team the question is, do we move closer to being the most customer-centric fintech in the UK, or do we move further away from that? And if the answer is we're moving further away from that, we don't do it. If the answer is that we're moving closer to it, but there is a number of options, then we consider things like cost, resource, time to delivery, profit.
And that's what you measure. And Damien, that's where the measurement comes in.
Yeah, exactly.
Comes in at that level. No, that's really interesting, and I think there's a lesson there for everybody. I know people can get very confused about vision and mission, and perhaps sometimes that confusion can actually get in the way of making progress. But it's really clear you're people focused, and the fact that you use it as a measure, are we moving further away or closer to it, and then you can measure the impact and the degree in various ways, as you suggest, is I think a good lesson for everybody, and clearly important to you as well in moving the business forwards.
Yeah, absolutely. Absolutely.
Well, listen, you're in an interesting space. You're innovating, you're challenging the model, and that's really fascinating and exciting. Thank you, Damien, for sharing your time and your thoughts with us today. It's been an absolute pleasure to listen to you and what you've got to say.
Cheers, Gavin. Well, thanks for inviting me along.
You're welcome.